What's up, guys? It's Mr. Fit to Flourish, and today I wanted to talk about a couple things that I look for when I'm trading stocks and options. What am I looking for? Okay, first I want to talk about options and what to look for in the stocks that you use to trade options on. The number one thing I want to talk about first is you need to choose just a handful of stocks, okay? Don't try to spread yourself too thin like, oh, someone's talking about this, Wall Street Bets is talking about this, Reddit is talking about this, TikTok is talking about this, Twitter's talking about this. Like you can't be all over the place, or else your trading is going to be all over the place. Okay, and you might be thinking back to like, oh dang, why am I losing? Why is my trading like up and down and up and down? Well, it's because you're trying to follow too many stocks, and you're trying to get into these hype stocks, and you're FOMOing a lot. You're FOMOing into stocks that people are talking about, and you're like, oh, I'm missing out on Bitcoin. Oh, Bitcoin, and everyone's hitting me up about like, oh, tell me about crypto. Should I be in? Like, I'm not gonna tell you. You don't even trade. You don't even trade. So don't worry about it. You're not missing anything. Okay. But I do want to tell you, you need to pick, number one, pick a handful of stocks. Number two, pick stocks that you know, like, and trust. So people do business with people they know, like, and trust. So if you like Nike, you buy Nike, you might want to look at trading Nike. If you're familiar with Tesla, you have a Tesla car, you might want to look at trading Tesla. Okay. The other thing you want to look at, not only like something you know and that other people know and consistently talk about, popular stocks. You want to look at stocks with a good history. So Amazon, Microsoft, Google, some of these bigger names. And the reason is because these names are so well known, there's going to be a lot of liquidity. What does that mean? That means that there's a lot of money being exchanged on a day-to-day basis. These companies are large, okay? A lot of liquidity, okay? Not only that, but there's a lot of volume. So typically when you're trading a stock, you want to look for stocks with a volume of 1 million plus, okay? The volume on a day-to-day basis is an average volume of a million plus, okay? Anything below that, you're typically running into penny stocks or stocks that are susceptible to Ponzi schemes, pump and dumps, all that good stuff. So you want to be careful with that. You also want to look out for penny stocks. Look out for stocks below $10. Usually not going to be the best quality stocks. However, sometimes they can be IPOs, so initial public offering stocks that just pretty much started their company and started offering shares to the public. Usually that's kind of what happens at that point, and then they kind of run up. But be very careful, be aware of these stocks. So talking about these stocks, right? So let's actually share my screen here and show you a pretty good watch list here, okay? I like to share this watch list because it's taken me years to kind of figure out, like, it took me years in the beginning, like, okay, like what stock should I be looking at anyways? Well, like I said, these are pretty good stocks here. So not only are there stocks, but there's really good ETFs that you might want to be looking at. So like IWM. IWM is the Russell 2000 ETF, and it is the smallest 2,000 companies, so small cap stocks. And look at this. Look at the volume. The volume is 19 million on a day-to-day basis. Or today, and then the average volume is 26 million. So really good. Okay. And then in terms of NVIDIA is a absolute mega cap, new age mega cap stock. So you can look at the market cap is 3.5 trillion. Look at the average volume, 216 million is insane. So a lot of liquidity here. Okay. So really good stocks to trade options on. And then SPY is an ETF. Look at the daily volume, average volume here. So these, if you are just starting to trade and you're looking for quality stocks to trade options on, IWM, NVIDIA, SPY, they're top 3 stocks to trade, okay? QQQ. So QQQ is more of a technology ETF as opposed to SPY, including Mag 7s, other large companies from different sectors, and the Mag 7. And tech companies, but QQQ is more of a tech play when it comes to big money, okay? So QQQ, if you look at QQQ, look at the average volume here, 28 million, okay? Another good stock to trade. And then Microsoft, of course, a lot of people know what Microsoft is. Why? Because Windows Vista, okay? Microsoft, again, technology, computers, everyone knows about these companies. And let's take a look at that. Look at the volume, over 22 million, okay? Market cap, 3.2 trillion with a T, okay? Mega cap stock. Google, and then Amazon and Apple, okay? also Tesla and Meta. Okay, so really good companies there, and you can look at my watch list and kind of see some of the other companies on there. But the ones that I mentioned are really the ones I would pay attention to as a beginner, and also just because of the quality of the companies and the quality of the volume and liquidity that is available in the stock. Now, when you're trading options, you want to keep in mind that when you're trading options, you want to be trading options at strike prices where the volume is at least over 500. Again, why do we care about volume when it comes to options or when it comes to trading? Because you don't want to be left holding the bag, okay? You don't want to be left holding the bag. What does that mean? Well, if there's only like 5 people trading, you might be trying to sell something for $1,000 when this person's only wanting to buy it for 400. Now the bid-ask spread, so the difference in the price of the selling person and the buying person is so big, $1,000 versus $400. That's a $600 spread. So both of you might not get the price that you were looking for. Okay, but when there's a larger volume of people trading something, then the bid-ask spread is going to be smaller. So if there's 5,000 people trading that same thing, the bid-ask spread might be like, hey, I'm trying to buy it for $999. Hey, I'm trying to sell it for $1,000. So there's only $1 difference. So you can get a better bang for your buck. So the person buying is going to be happy and the person selling is going to be happy. There's better order balance. Okay, there's more liquidity. Okay, more liquidity there. That's the basic concept. So that is that in terms of options. So stocks to trade options on. Now, when you're trading in general, I wanted to just kind of, or not trading, but investing in general. I wanted to kind of touch on this because I'm getting a lot of questions from like friends, family, other people who are interested in investing. Investing is a lot easier than just trading. When it comes to investing, literally just the problem with people who think they can't invest is because they don't want to invest. They want to trade and they want to see a really quick return on their money. Investing is a long-term strategy. So you're going to have to hold a security for 1 year or more. That is what investing is. Trading is when you're holding it for seconds, minutes, hours, days, weeks, or sometimes even months. Okay. But once you get over that year threshold, that's considered a long-term investment. And really, when you're investing, you're really looking at a longer term horizon, like something like 3, 5 to even 10 years. Okay. So when you're looking at stocks like this, again, you want to look at stocks that are high quality stocks with good leadership. So good CEOs, stocks with a good forward guidance. You want to kind of look at PE ratios and see what the projected growth is for that company. So the price to earnings ratio. And then you want to make sure that stock is liquid. So a lot of volume. And then also, like I said, you want to do business with people you know, like, and trust. So what is it that you currently own? Do you own a Tesla car? Do you have a Microsoft computer? What are people talking about? And then when you do decide to invest, a lot of people are like, oh, well, the price is so high. Well, there's something called pullbacks or retracements. The best time to buy is when stocks come down to the easiest time to buy, and the best time to buy is when stocks come down to what's called the 200-day moving average. And if you don't know what that is, you can just look at your Robinhood, Webull, or your brokerage or your charting platform, and it'll tell you like, okay, 200 moving average is here. So if the stock comes down to the 200-day moving average price, that's usually a good time where institutions and hedge funds like to pick up a stock and think that they're getting the stock at a good price. And that is really a good price to pick up stocks at, okay? And then last but not least, when you are investing, you're never going to really get the best price. You can't really time the bottom. Some people time the top more better than they time the bottom. They get in at the top and then they sell off. But guess what? There's something called DCA, dollar cost averaging. So what does that mean? That means like when you get in, you might get in at $100 and the stock moves up to 150, and then it moves back down to say 75. Okay, so you got the stock at 100, you went to 150, you're like, oh dang, I made some money, but then it all of a sudden went back down to 75. You're like, oh crap, it's falling. Well, what you want to do whenever a stock pulls back or gets at a lower price, you want to do what's called dollar cost averaging. You buy some more of that stock at that lower price to then drive your average price that you bought the stock at to a lower price. So therefore, when the stock does go back up to 150, then your total investment will appreciate a lot more than if you just had sold or let that stock go back down, even though you only got in at $100. So dollar cost averaging is pretty much picking up more of the stock whenever you get a pullback or what we call a retracement. Okay, so then it drives the average price that you purchased the stock at lower, so that on the move up, you can now get more gains. So hopefully this helps someone out there in terms of investing, and then in terms of just choosing stocks and options to trade or invest. So really brief, quick overview. Just wanted to kind of touch on that, give some people some ideas. I know this is very basic stuff, but it's stuff that I wanted to know when I first started. Okay, so hopefully you guys learned. And it's Mr. Fit to Flourish. Yeah, boy. I'm out. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.